Broadcast is now starting. All attendees are in listen-only mode.
Hello, traders. How's everybody doing today? Welcome to Office Hours. It's Monday, the 9th of December. I want to thank everybody for popping in. Scott is missing in action, so I'm just going to do my best to get us started here. Of course, won't be any polls or anything like that. So we're going to dive right in here, ladies and gentlemen. Today's the 9th. Welcome, everybody. Before we get rolling here, just want to take a moment to do the legal mumbo jumbo. We're all big boys and girls here. I just want to reiterate the fact that everything that we share with you in these webinars is for educational purposes only. If you do need investment advice, please seek out a registered investment advisor or a Series 7 licensed stockbroker, someone that's legally allowed to dispense investment advice to you. If you need to know what to buy, when to sell it, all that good stuff, please seek out the appropriate parties. And once again, we're just some trader guys that have been around for a long time using some really cool software and just want to educate you on how to do that. Okay, so before we get going here, always like to take a little bit of time here at the top of the webinar, especially since we've had an influx of new users from our very recent test drive, to let everybody know about the community that we fostered around the technology. Barry's Trading Room up here in the left-hand corner, one of the premier trading rooms out there. If you've done any searching for trading room, you know that most of them that are worth their salt, which are few and far between, most of the time there's going to be a price attached to those trading rooms. So keep in mind that our trading room is free to everyone. You don't even have to be a TI subscriber to get in there and check it out, see if it's for you. And other than the price being one of the best attributes of that trading room, obviously the best attribute that we have in there is Mr. Barry Anderson, who is the moderator of the trading room, does a fantastic job at helping people, answers questions, showcases his trading style, and more importantly, the way that he uses our software. And I hate to do this, ladies and gentlemen, but I got to take a quick pause here.
I'll help. Hey, what's up, everybody? Jamie's got to take phone calls. That's just how it is. Whoop. So, Jamie probably did not remind people if we're coming in late, we're going to record this. Scott threw us a curveball. He didn't show up, but normally Scott does the recording. Jamie will do the recording on this one. And
okay.
Probably recording should be up by tomorrow is what I was telling him.
All right, sorry about the interruption there, ladies and gentlemen. Got some things going on here, but hopefully we won't be interrupted anymore. So back to the point here. The trading room, packed full of people each and every day. So if you haven't gotten in there and checked it out, by all means do so. As far as the 5 p.m. Eastern webinars, of which today is part of that schedule, you get myself and Steve on Mondays. Steve's going to take the steering wheel tomorrow for the trade of the week webinar. Andy usually rides shotgun with him, but it'll probably be me since Andy's out on vacation. Well deserved, I might add. Then Wednesday rolls around and we change it up a little bit. We bring in our CEO and founder, Dan Merkin, who founded the company, along with our Chief Technical Officer, Brad Williams. Always a cool broadcast with those two. And then, of course, Andy usually rounds it out on Thursdays with the trading studio, and I typically ride shotgun with him, but once again, he's on a well-deserved vacation. Friday rolls around, we change it up just a little bit, what I like to call the free-for-all support session. Kick that thing off at 11 a.m. Eastern, and depending on the crowd, we'll usually take it at least 2 hours, sometimes 3 hours if the crowd's rowdy enough. But nothing is off limits in the Friday support session. So whether it's something as simple as basics, navigation, all that good stuff, or strategy fabrication, back testing, auto trading, all that good stuff, anything is fair game. So keep that in your mind for Friday support session. In addition to the 5 p.m. Eastern webinars, we do have our TI University series of webinars that are going on Monday through Thursday. All of these kick off at 12 p.m. Eastern, Monday through Thursday. So 101 up through advanced to 401. We do recommend that you take these in order because you'll need to build on the layers as you advance to each and every 101, 201, so forth and so on. 12 p.m. Eastern start time. If you can't make that 12 p.m. Eastern live version, we do have all of these pre-recorded on our YouTube channel. The good thing about these is the content's always the same. It remains static. So you can watch the videos as many times as you want in order to get everything locked and loaded in your brain. If you do have any questions, you can always hit us at the info@trade-ideas.com email address. If you can't attend these in a live format, which is the benefit, you can get your questions answered in real time if you are able to attend them, the live versions, that is. All right, moving right along here, always just like to show everybody how our user base has expanded since we introduced the first AI module back in 2016. Picture speaks 1,000 words here. It'll be interesting to see, where we close this year as well. Of course, that was original Holly. We now have 2 additional modules as well, but soon they'll all be compressed back into one for easier management. In addition to the AI coming online not too long ago, we also launched Brokerage Plus, which is our add-on trading module to be used with interactive brokers currently. I say currently, it's currently the only broker-dealer that you can interact with Brokerage Plus. But hopefully, keeping our fingers crossed here, that's going to change in the not too distant future as we add additional broker-dealers, and preferably keeping fingers crossed once again, and I don't know how it wouldn't be, connection with a $0 commission broker-dealer. Funny thing about the whole IB situation, the reason that we originally picked them is because they had the cheapest commissions. But as we all know, everybody's flipping to 0 commissions. So we're still with IB, still have cheap commissions, but Ameritrade, E-Trade, 0 commissions. So don't know which one we're going to add first, or of course it could be a very unknown firm called Alpaca. But whether it's Alpaca, E-Trade, or Ameritrade, eventually we will have a connection through Brokerage Plus so that we can take advantage of 0 commission in the Brokerage Plus environment. But as you can see here from the shot, live orders in blue, demo orders in orange, these numbers just keep ticking up steadily each and every month, and will probably continue to do so indefinitely. All right, here we are at the agenda for today. Got a lot of interesting stuff to share with you guys today. Holly really put on a show considering market conditions, had some fantastic winners in there. So Steve, we're at that point in time where time to take a look at the big indices, the Dow, the Qs, IWM. So if you're ready for it, I'll kick it on over to you and we can take a peek here.
Sure, let me grab my little e-pen.
Sure.
David, you should be able to see our screens because we're kicking away on them here. All right, so, not a ton of new info to look at today or a ton of new changes. I mean, nothing really has changed too much. Let me count back, 1, 2, 3, 4, 5. We've had an interesting 5 days since we last met, but the point is, price action doesn't stay down too long. It pops right back up, but then we get into the area where Andy says the air starts to get a little thin, and the price action has a hard time kind of following through. So looking at the S&P here via the spiders, we had an interesting event today with giant gap up on Friday. We held that a gap up today, but as the day it just sort of weathered on, and I think it's kind of related to what's dropping over in Washington. Some reports dropping. Aftermarket, you can see we're actually lower at 313.46. So the price action is stalling after that nice big bounce, big reversal bounce down here. I mean, once again, there's a beautiful candle. Those are the prettiest of the reversal candles after you've sold off a few days. It's always nice trying to lean on those if you're still in the camp of buy the dip and it's a bull market, as Sean says. But now we're in this kind of crazy void here where we couldn't really go out and take it new highs. We've got a gap here that's just staring us straight in the face. A lot of softness today, so I think what we're going to need to watch is the 10-period moving average. Is this thing going to probably flatten out, and ideally maybe a couple of days sideways above that 10-period moving average? And if we have that, then all bets or all things look go. For the bulls to continue sideways, consolidation wouldn't be bad, but we don't have any of that data right now. We're just kind of saying, what if? This gap, more than likely, will probably be filled maybe on the open tomorrow. We might come in tomorrow and have a major gap down here to these areas, but pop back up, we shall see. But that's, really all I see. It's not a huge bear case to be made. I'll tell you what, there is a case to be made, and that's kind of what we did on our party line swing trading account today, the four of us, and we threw on some hedges because it just felt like things are getting a little soft out there. The longs that have been working great, trimming some of those. But as we hit this little skid here, it felt like maybe putting on a hedge of SDSs or VXX or some sort of inverse ETF can be the way to go to weather any kind of crazy neck snapping reversal that pulls the rug out from underneath you, meaning you 10 things and the rug is pulled out underneath you before you know it, and we're down here and you're having a really bad day. But if you've put on a couple of short hedges, going into the day, something along these lines up here, it doesn't hurt as bad if we get a giant pullback. I'm not saying we're going to, I'm just saying if we do, sometimes these are the areas to try and maybe press, change, and rearrange a little bit and put some hedges on. I'm not saying go short the market, I'm just saying we might be in for a little sloppy ride. Disregard that stupid candle, that's a bad tick, and I'm sorry that we're broadcasting that. But same kind of a thing over here in the NASDAQ Qs, even more if you look at the S&P, I'm sorry, if you look at the 10-period moving average, we're kind of trading below that here as we go into the after market. There's a gap down here which will correspond to that 20 period. So a couple of deeper, not too deep, but a bit deeper than the SPY pullback. But as long as these moving averages kind of stay flat and the price action doesn't pull back too deep and maybe just gives us a little sideways action, there's nothing wrong to be, nothing can be bad. It can be said about that. I'm sorry, I had surgery on Thursday, and I think some of the damn anesthesia is still working its way through my synapses out my freaking mouth. IWM, we've talked a lot about that one lately. Curiously, did not give back that much. There's still a good amount of space here in the gap and also that 10-period moving average. I would like to see the IWM hold that. So you can just see across the board here, no matter what type in, whether it's the Dow next, we're just in kind of a no man's land, and we want to see that no man's land just kind of extend sideways a little bit. We'll be okay. What we don't want to wake up tomorrow is just see something crazy happen. There's a black swan event and there's giant volume tomorrow, and we're way down here. If we see that, then all bets are off. But I can't predict that. I'd be stupid to predict that. I'm just saying when it gets a little sloppy up here like we are, I'm expecting a little slushy sloppiness here the next few days, and so trim some of your profits, take a few profits, maybe put on a hedge or two, and see what resolves. But I think the big takeaway that I've kind of stumbled on here is sideways action for the next 2 or 3 days would be warranted and welcomed by the bulls versus any kind of a deep pullback. And obviously, if we do get a deep pullback, I'm not predicting, but we need to watch this level right here. It's pretty cut and dry. We've been building higher lows along the way. And if we can call that a higher low in this little anomaly there. But if we take out at that level and close below that level in the near future, that could be something that could be technically destructive. We don't want to see, but I'm getting ahead of myself. We don't know what's going to happen. Let's just see if we have sideways action and a nice simple Santa Claus rally. And that's all I've got for you guys today. Jamie, kind of an abridged version.
Well, thank you very much, Steve. I will grab it back from you here in just one moment. Okay. All right. So you should have eyes back on my desktop. Yeah.
Correct.
Okie dokie. All right. Thanks a bunch. Okay. So we're going to go over some of the same compulsory stuff that we typically do. And then towards the end of the presentation here, we are going to be talking about sniffing out market direction using paper algos. Okay. And let me just clarify that by saying, what is a paper algo? Okay, well, it's simply an algorithm for automated trading that you're going to be running in our paper trading mode, which, up until we released our paper trading module, which you execute through Brokerage Plus, and we'll be looking at that as well here in a little bit. A back test is a great thing, and you can see things that have happened in the past, but those things are in the past, right? But it's a completely different perception, so to speak, when you can see these things playing out in real time. All right. So it's really interesting. It's a really great learning tool. I'm learning from it. It's all new to me as well. So some pretty good possibilities out there about how we can perceive market direction based on how certain algorithms are performing. All right, but we're going to save that for the end. In the meantime, talking about our compulsory stuff, we're going to, number one, talk about expectations for 15 minutes into the session, and then we're going to showcase some of the Holly trades, which, by the way, ladies and gentlemen, considering market conditions today, and not that big of a gap, but hovering for the first couple hours up here, and then just a slow degradation into the close. Having a market like this, where Holly is predominantly long, but with some interesting shorts mixed in here, seeing performance like this on this amount of trades, man, not too shabby at all. So we're going to talk about some of those trades, of which there were only 14 signals today. So it's not like she had to generate a ton of trades to get these results. Excuse me. Let me get just a little bit of water here. Okay, so it looks like this screenshot that I had planned on putting in here, I forgot to put in, but no big deal. It was just my compare count readings after the first 15 minutes today, which, by the way, this is not accurate because I reset it. But after the first 15 minutes today, I looked at my favorite compare count window, which is looking at stocks with a market cap of 4 billion or higher, hitting highs and lows in the opening 15 minutes with some accelerated 1-minute volume. And this is the go-to. This is the one that I always use. And after the first 15 minutes, we had a 59% bias, as you can see right here, a bullish count of 59% green and only 41% red, okay? And that's a pretty good count, okay? Now, it didn't quite get to the magical 60% level. But then again, we only have so many days in the month where we see 60% either to the upside or the downside. But 59% is still a pretty good count. Just for reference, I like to see them above 55%. Anytime it's less than 55 or right at 55, well, it's just kind of like anything goes. But this was not quite 60, but 59% after the first 15 minutes. So I kind of told myself, all right, there's going to be some good long opportunity out there, but not getting north of the 60 percentile mark tells me to take that money. If you get up nicely in a long position today, expect a little bit of push, but not really any massive follow through. Okay, so good rule of thumb when you see a count like this and it comes to trade management, because by the way, ladies and gentlemen, we all have our rule set. Okay, but as Steve always likes to say, trading is quite subjective, right? So every day is different. Sometimes we're going to have more follow through. Sometimes we're going to have more pullback. So over time, watching these metrics, applying these techniques, you can get a little bit better feel of when you should take that money off the table. So today was one of those days. As soon as you get a little push, a little stall out, clip out that half, set that break-even stop for the second lot, so that if it does go south on you, which a lot of them pulled back today, obviously because of the market direction, you still made money on that first lot. All right. So let's talk about Holly and some of her trades. Long bias, 14 trades. Kind of a mix here if we focus on the risk modes that everybody was in: moderate for 1.0, moderate for Neo, and conservative for Holly 2.0. So let's do this. I'm just going to sort my blotter here. And by the way, these are all the trades. We can always verify that by right-clicking and going to segments, making sure we're on all trades from all segments. So here are those 14 trades, and I'm sorting by moderate profit right here. Now, first and foremost, just from a quick glance, losers down here, winners up here, yay. A lot more green, a lot bigger numerical value on the green, but hey, we did have our stop outs like any system, any human, any automated strategy is going to have. But only 2 stop outs out of 14 trades, not too shabby. And then after the stop outs, we did have some losers in here, but they were pretty minuscule compared to the winners. So we didn't have office hours last Monday. I had family issues to take care of, but we did have Andy's trading studio. Steve had his webinar last week. And one thing that Andy and Steve and I have been pounding the table on over the past few weeks is the IWM still playing catch up. Okay, it's very uncharacteristic to have a big indices like the SPY and the Qs and the Dow hitting all-time highs, while the IWM is still playing catch-up here. It still has a pretty good clip to even make a run up here to get back to prior highs. So we've been saying with Holly, or the AI I should say, as we're getting away from Holly, just calling it the AI, when the small dollar stocks pop up, you may want to take heed, pay attention, and today was a classic case of that. So right off the bat, let's just take a look at NLTX, which was pretty early in the session, not quite 15 minutes in, about 40 seconds shy, but 14 minutes and 20 seconds in, we get this buy signal here on NLTX at 513. Takes its time, ebbs and flows around the entry line there. Almost gets us a stop out, but almost only counts in horseshoes and hand grenades, ladies and gentlemen. So no stop out on this one, only to then turn and kind of grind higher, taking into account the 10-period moving average, still well above that. What I really liked about this trade right off the bat, though, number one, what's a good habit to get into when these Holly trades are coming out and you're entertaining? Hey, do I want to take this one or not? Well, volume is one of the first things that I look at. And the volume was definitely there in NLTX today in a big fashion because this thing closed over 17 on the relative volume time frame, okay, or relative volume, I should say. That's pretty big, usually only kicking out 124,000 shares on a 3-month average, crushed over 2 million shares today, almost 2.2 million. So a lot of things I like about this signal. Notice that once we get the signal from Holly, we take a little pullback here, tempt the stop loss, and then we regain that entry signal level. Now, 1, 2, 3, 4, these are 15-minute candles that also set up perfectly for a opening 1-hour range break, what we typically refer to as an orb opening range break. So what I like to also refer to as a secondary pattern emerging on top of a Holly signal, which we all know that we already have statistical probability on our side because Holly is bringing it to us. All right, so a beautiful entry signal here, a little sideways action, reclaim the signal line, and shortly after that, we get a range break. So keep in mind, this was a great place to add to the position if you were already in it with Holly. And then we get a nice little push up here, a little more sideways action. What are we noticing here? The whole time this thing is staying well above that 10-period moving average. And it really gets interesting over here because signal with Holly, statistical probability on our side, big volume. And by the way, you know, if we consulted the 5 and the 1 minute, we'd see that those volume levels were always pumping big time during the time that this trade was on. An opportunity to play a secondary pattern here, and then another setup here as we go sideways, as buyers and sellers become equal, come down here and test the 10-period, gives us confirmation, yes, indeed, it is acting as a supporting mechanism, and then this little flat area here, yet a third opportunity to interact with this play today, okay, as it sets up again for a nice secondary range break. And then after that is when the majority of the gains occurred. So at the top here, this little guy was up 39.9% from the original signal price here. All right. So, you know, whether you got out here, here, or here, plenty of profitable opportunities in here, all the while the 10-period just keeping it right in line here. And this is really crucial here. You know, we come down here, we test, we put in the little doji-ish type 15-minute candle. Nope. Pops right back up, sets up for yet a third entry into the stock. So this is one that just played out textbook, and not one, but 2 times it's set up after the Holly signal to bolster the position or to really leverage that position today. Hey, Steve, that is great to hear. I love hearing that, you know, people making good money on these Holly plays. Now, having said that, let's check out the highlighted area right here and notice that Holly, in her conservative mode, and by the way, I should clarify, these figures here on P&L are all based around me risking $100 per trade, as we can set up in the AI trade panel over here. $100 per trade. That's why we're getting $100 stops. But just to clarify, that's where these numbers are coming from here. So you can see Holly in her profit save mode. Well, what is profit save? Well, profit save and reduce risk are her audibles that she can call that lie outside the scope of a profit target, a stop loss, or a timed hold. If the thing goes sideways a lot of the time, um, she'll pull the plug early, and that is the case that occurred here. It's kind of like a modified trailing stop. She plugs out. We can see right here, probably at the bottom of that tick right there, barely makes anything, 58.25, half of our risk, roughly, a little over that. But if you stayed in, you made considerably more, almost, well, we could call it 4 and change on the X factor there. So check it out. I like to say this over and over again because time and time again, there proves to be value there. If you weren't in this trade and you've got your AI blotter up and you see it flash and you're like, hey, the AI just exited a trade. That should also be something that you should be paying attention to. Pay attention to the entries originally, pay attention to the exits, because sometimes the exits aren't too shabby as far as an entry signal, just plain and simple. So if you were brought to if NLTX was brought to your attention on Holly exiting the trade and you're thinking to yourself, it's not too far away from that signal line, and man, it just had a good range break, it's taking a little pullback here. Heck, even if you bought it anywhere in this red candle right here, you still got to participate in the majority of the move, right? So always, or get into the habit, pay attention to the original entry signals. Sometimes they're going to look choice, just like this one, and a lot of other ones. And then sometimes exit signals can also be used as entry signals. All right. Next on the list here. So we did have quite a big spread between conservative and moderate profit here. And if you would have just opted to stay in the trade and ignored Holly's exit signal, which, by the way, we're a little bit more proficient at reading charts, or Holly's not really reading charts, as I should say, but I always feel the need to let everybody know that the exit signals aren't really the strong suit of the AI, it's the statistical probability. So just keep that in mind as you work and move along with the product. All right, some decent conservative and moderate risk here in a short. Always like to see a little diversification here, and man, oh man, what a beautiful signal. Now, might be a little questionable today as to whether or not some broker dealers had this ready for shorting, because as we can see here, it's only a 3-day-old IPO, and this is daily. Sometimes I forget and leave my charts on weekly or monthly, and I'm like, 3 days, but as we can see from the D up here, it's a 3-day-old IPO. So, I mean, just look at this perfect timing here. We have the opening candle right here, all right? This grinds sideways, takes a little, somebody got happy right here, but of course this is probably just down pull with the market. But what a beautiful range break, perfectly coinciding. Of course, this is downward momentum. Notice the strategy doesn't say anything about a range break, all right? But that's how it lined up today. So just simply shorting that opening range break there at 39.52. This one never really looked back, gave us a little bit of a wiggle back to the entry signal there, but just boom, 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 just a beautiful trade on many fronts. Once again, the shaded area coinciding with the timed exit. So this one made it the duration. Holly's programmed to get out after a certain time frame, and you might be asking, well, what was the timed hold? Okay, and we can see, and of course I have to use all segments just like I use all trades, but if we look at the downward momentum strategy, we can always find what these guys are designed around. 60-minute hold time, 60-minute hold time. So 60 minutes passed, AI did what it was programmed to do, but hey, this thing was doing exactly what we wanted it to from the time that the signal was put on. Takes a little break here, and if we would have ignored Holly's exit signal there, we could have gleaned a little bit more out of that trade. I say a little bit, but almost, or right at 2x from where she bailed on the trade in conservative profit mode. And once again, that was a timed exit. Now on to another long that pretty much blew the doors out today, APTO. Once again, let's see, let's take a look at the market cap, only 142 million. Wouldn't consider this extremely low float, but 40 million is not that much in the float. Usually I like to say 20 million or less as far as low floaters go. And by the way, let's backtrack to NLTX. Now we're talking. See, 27.57 million in the float. So that's something that I forgot to mention earlier, along with the secondary pattern, along with the massive volume. We had a pretty low floater on our hands. Not quite as low as 20 million, 27 million, but that's low float. Yeah, low float enough, I should say. APTO coming in at 40 million, nothing to sneeze at. And look how that guy closed today. Almost 40 on the relative volume scale, kicking out 10 million shares when this thing usually only clicks out not even 300,000 on a 3-month average. All right. So definitely bringing you some hot moving stocks today. Got the same thing occurring right here in APTO as far as the range break goes, the secondary pattern that I always like to harp on. And look, even brought to us by the breakout long strategy. So 15, 30, 45, just not quite 45 minutes into the session there. Actually about 33 minutes into the session, we get this beautiful entry signal here. And this one, man, no sideways meandering around the entry point here. It was just boom, straight up, okay, over the next 45 minutes. Topping out at the top here, this little guy was up 28%, okay? So we got one that was up 39.9%. Small cap, we got one that was up 28% today. I hear a lot of people talking about, I don't trade small caps. Well, to each his own. All I really care about when I trade a stock is, does it work? I don't really care what it is, what they make, what they do, what they're capitalized at. Now, having said that, I'm not going to be jumping into these stocks with huge spreads or low volume or look like a bunch of dashes on the screen. But if it's fairly liquid and the spread's not too painful, I don't care what it is. I don't care if it's $1, $2, $200, or anything in between. All I care about is going to do what I think it's going to do. So APTO and NLTX just kind of blowing the doors out today. I mean, really, what else is there to be said? This one even pegged it pretty dang good. Notice that there is no conservative moderate profit spread here. All right, things worked pretty perfectly today as far as her profit save. Came up here, took a little pullback. She pulled the plug. That was the right move. So just a lot of good things about this trade on the entry and the timed exit. If you would have stayed in it, you would have given some a little bit back, but still been up 50 cents on a $3 stock, even holding all the way to the close. Of course, this one was levitating well above that 10-period moving average, and then it just kind of hemmed and hawed back and forth throughout it the rest of the day. So, all right, Steve, good to see. You made the big money on the NLTX. You only made not quite half as much on the APTO, but man, that's good to hear. Very good to hear. Real quick question to you, Steve. Were you in auto mode or were you hitting these manually? I'm curious. Feel free to take your time there. So that's what we got going on with Holly today. And, perusing the rest of these, not a whole lot of spread with the exception of ISIR here. Now this one, zero on a timed exit. And that's just kind of the luck of the draw there. Now, once you get a pop like this, I mean, this is a 60-cent stock. I personally did not hit this one today. Just never even really wasn't around when it came out today. What did it look like on the level 2? Was it liquid? I don't know. But regardless of the price, having it run up a pretty good percentage value and then come all the way back down, that one would have been hard to sit in. So definitely one of the lower price stocks that we've ever seen Holly trade, 60 center today. Okay, so moving right along here, we might finish up a little early today since Scott didn't have his opening volley today. Maybe, maybe not. We're doing good on time at present. Okay, so Steve, you're hitting those trades manually. So, just to confirm everybody, see, it is possible to interact with the AI manually. Okay, we get a lot of people, sometimes they're like, every time I pull up an AI trade, the stock is way past the mark. Well, that's just the luck of the draw. As we can see from the biggest winner today in LTX, from the time you got that signal, look how much time you had to interact and even get a better price than Holly. Once you see something tempt or flirt with that stop level right there, and then you get that wick put in, and then we're right back up to that entry line, that's a good sign. So just keep that in mind. Okay. Let's just make sure we covered everything that I had here. My brain's a little all over the place today. IWM, small cap Fiesta. Okay. All right. Now let's talk about sniffing out market direction using paper mode, but taking it one step further and using algorithms, much like in the capacity as I use my compare count window. Just to reiterate, why do I look at this after the first 15 minutes? To help temper my expectations. And ladies and gentlemen, I don't care what it is, anything in life, especially trading and other things that we won't go into detail about, it's all about expectations, because if you have the wrong expectations, you're just kind of setting yourself up for disappointment most of the time. All right. So why do I look at the compare count window 15 minutes into the open? To help me try and temper my expectations. Be how aggressive, to try to kind of get me into the queue. Be aggressive, be conservative, be kind of in the middle. But bottom line is it's expectations. So now that we have the ability in Brokerage Plus to launch algorithms in paper mode, we can now start learning from that and start noticing correlations, because it's all about direction and timing. You can take a stock that was up on the day and gave it all back, and take one that was down, the same stock later on is down on the day. You could have made money long, you could have made money short. It all focuses on the timing. Okay. So what you're seeing right here is a strategy that I developed a while back. I'll just quickly pull the alert window over here. It's called the 250 short, okay? And it's not rocket science. Using a new high as the trigger, but stocks that hit a 250-day high. Now, I didn't just arrive at this value at random. I did a lot of back testing. Started off with 10-day high, worked my way up. Every so many notches, I could see the performance would get better or worse. Once I surpassed 250, performance started degrading, and I originally designed this strategy as a short. Okay, pretty simple filter set, not a lot of craziness going on here. Number one, I want to make sure they're fairly liquid, which means the spreads aren't going to be too big most of the time. So I'm saying, look, it's got to kick out 1 million shares a day. Okay, typically if a stock's kicking out 1 million a day, the spread's going to be minimal. Weeding out ETFs and iShares with the earnings filter, and just capping it at 200 and getting rid of the bad prints and the noise with the distance from inside market. So this is about as simple of a configuration as you could ever hope to come up with. But what I've started learning is that in the end, the back test, I still like to play around with it, but in the end, it's about knowing when, well, not necessarily the when on the strategy, but do I run it long or do I run it short? And what helps me decide that, number one, is my compare count window readings. Okay, if it's 55% or less, typically I'm going to run it in the direction in which it was designed, which is short. But once we get up to 55, and like we did today, 59%, not quite at the 60 mark level, well, I'm like, my thought process was this morning. Well, and let me backtrack just a little bit here before I go on with this. We can never forget about what's unfolding on the daily chart on the SPY, because we have to figure out, okay, if I'm right on my prediction based on what my compare count window might be telling me, or whatever else it is that you use, hey, you might roll chicken bones or look in your magic 8-ball. Everybody's got their different little technique. For me, it's the compare count window. All right. There has to be room, quote unquote, on the chart. So, before the day transpired, we could have easily went up here and popped a new high, or we could have gravitated all the way back down to the 10 period, which looked like we might do that for a while, but didn't quite make it, just kind of floating there in that little space. But bottom line is, I made the decision based on a 59, almost 60% compare count reading to run this one long today. Okay, and you can see these are all the closing values, but take note of the equity curve early in the day. All right, because we never know how long a push is going to last or a pull down. These are all the random things that make trading so darn difficult. Okay, But look what I enjoyed early on, okay? I let this thing pile into 30 positions. That's just the number that I pick. And then based on how this strategy performs, I know that is my prediction right, or what I felt based on my compare count readings, was it accurate today, or was it not? And clearly we can see the decision to run long paid off early. All right. And of course, you know, we had macro events today, macro events manifesting themselves in the thing that everybody's been waiting and putting off, the Inspector General report. And so whether we like it or not, whether it's a Trump tariff tweet or whether it's other political upheaval that we're all seeing right now, it's affecting the market. It's not anything that we ever really like happening in the market, but it's happening and we have to deal with it. Hopefully it won't last forever, okay? But, Stephen made the comment as the trading day was unfolding, yeah, the thing's coming out at 1 p.m. Eastern time, so never know what's going to happen, okay? Market's going to like it, market's going to hate it. Well, it ended up looking like it was not too favorable for the markets. So this picture tells the tale today, okay? Yes, I was right in my initial prediction that we would go up a little bit, or that running this strategy long was the right way to go. But didn't last long, all right? Get up a little over, it was almost actually like $300 in P&L. You just can't, the chart's not, that accurate here just yet. All the way back down to flat, pop back up about half as much. And then as we grind back down, well, it's good that I was right this first half, but also too, as things start to soften up, you need to view this little P&L graph here as you would reading, say, a stock chart, okay? Well, this range here, as soon as that gets broken and we have a little bit of momentum, which, ladies and gentlemen, we also watch our charts as well, and we can see clearly as we stair step down and we broke that prior low right there, we did get follow through. All this is coinciding. This is going down as this is going down. So keep in mind, if you're out of all your positions here, or worst case scenario, you flatted here if you're taking all the positions, or you're just using it as a windsock, right? Like when the helicopter lands, they got the little windsock blowing there. It lets them know how's it blowing and is it filled up, because the wind's blowing really hard if that's the case, right? Spinning around and all that good stuff. So not only was I right the first half of the day, but as I see these positions to start to degrade and we come back down here to the zero line and we push through, boom, that tells me, hey, now might be the time to think about putting some short positions on, because things are degrading. We didn't have most massive volume in the big indices today, but the market action followed this to the T, and that was where the majority of the money was today. We had longs early in the session paying off, but then later in the day, the most opportunity that we saw was to the downside. I mean, we got down 500 and change, almost, a little over 2 times what we saw on the upside. But we could see it unfolding as these positions started to degrade. And keep in mind, these are all big liquid names. They're not these little one-off small caps, right? All trading 1 million shares a day, and you probably recognize many symbols on this list today. So, this is a whole new way to perceive data. And whether it's my strategy, the 250-day short, sometimes you run it long, sometimes you run it short, you can pretty much pick any strategy of this nature. And it all is just going to come down in the future, in my opinion, or this is where I'm focusing my efforts, is when do you run it long and when do you run it short? And then do you have good metrics that might help you predict when to run a certain strategy and what direction to run it, right? So it's a whole new way to perceive data. So I hope I'm not just shooting over everybody's head right here. I hope this is making sense and resonating. But if anybody has any questions about what we're discussing right here, now would be the good time to throw them out there, as we got about 10 minutes left, just enough time to answer a few questions here before I let everybody get back to their Monday. That's right, Steve. Every graph is a stock chart now. A chart is a chart is a chart. whether it's this P&L graph breaking down and then making the bigger move of the day. And keep in mind, if you're in these positions, let's say in the future when we are connecting Brokerage Plus to $0 broker dealer, man, it's really going to unleash the power of all these buttons over here, right? So imagine, since there are no commissions, you can do exactly what I'm doing here, but in a real-time environment, and you don't have to take any big risks. Because when there's no commissions, what's to keep you from doing one share? Or saying, put $100 into every position, opening up your mini hedge fund, and when you start to see things topping out, you're like, okay, well, let me just highlight everything and close out half. And then I'll set all my stops for break even at the, if in case we come back down here. But if you already had all these symbols on, as soon as you saw this level here get broken, you can just be like, okay, now I'm going to short all these. Boom, as we go through here. All right. So it's a lot more methodical of a way to trade based around, advanced functionality and different ways to perceive data, because there's plenty of time to practice in paper mode. When you finally decide to go live, you can start off with micro lots. I remember in the old days, Steve, they wouldn't let us trade anything less than 100 shares for some silly reason, right? But the landscape has changed dramatically, and with the onset of the race to zero, it's just opening up a whole new way to interact with the markets that before was a locked door, because we could never overcome all the transaction costs to see what was out there. But that's all changing. It's a very exciting time to be in the market right now. Okay, so I don't see any questions coming through. Steve, unless you have anything to add, I'll just go ahead and walk us out here in a minute.
I do not.
Okay, so Scott usually does this. I'll attempt to stumble through it and not sound too crazy here. But we put out a series of ebooks not too long ago. Myself, Steve, and Andy, and Sean all contributed to these ebooks. Cool thing about them is they're all free. So just take note of the link down here. Just type this URL into your browser. You can download all these books for free, and I'd highly recommend it. We do podcast. We skipped last week, but we've got a bunch of them out there. We'll probably be doing a new one this Friday, but just locate your favorite podcast search engine, and it's usually myself and the CEO, Dan Merkin, up there talking about trading and maybe a few random other crazy things from time to time. Hey, we've got a little following, so people don't hate us too much. So check it out if you haven't done that so far. We do have I think, since Scott's kind of MIA, I think this code is still good for 15% off your first month or yearly subscription. If you do get in there and get rejected on the paper trade code, just hit up our live support from the chat area on our website, and they can easily dish out the most recent code for you. That, or email info@trade-ideas.com. You can follow Steve at Today Trader on Twitter. I am at QuantBot. You can like us on Facebook. We do have a telephone, but it's typically just for billing type issues. And then once again, the fastest way to get your question addressed and triaged over to the right individual, info@trade-ideas.com. So once again, want to thank everybody for taking the time to hear what we have to say today. Hope everyone has a great rest of the Monday. And Steve, we will see you tomorrow, sir.
Yep. See you guys tomorrow.
All right. Bye-bye for now.